This Honest Money podcast is brought to you by Prescient Investment Management, informed by science, guided by insight. Prescient Investment Management is a registered financial service provider.
Hi, Warren and the Honest Money team. My question relates to offshore investing. Currently, I'm invested in a feeder fund in my Equities ZAR account. And currently, with the volatility of the US dollar, the euro, and the Great British Pound, I just wanted to find out, do you have a recommendation on at what lump sum value I should be sending this money offshore and putting it into those different currency accounts? Or should I just keep saving and investing the money into a feeder fund in South Africa? Thank you.
The idea of, or the mechanics of investing money overseas, whether you do it monthly into a feeder fund in South Africa or into lump sums directly overseas, is kind of a tricky one for a lot of us. I think my starting point is, if you're going to save money on a monthly basis, then I think putting it into a feeder fund in South Africa first and letting that accumulate to a reasonably big size of money first makes a lot of sense. And then once it gets to a reasonably big size, you actually sell that unit trust and convert the money from rands into your global currency of choice and then send it out is probably the route I would follow. So I've just thrown a whole lot of jargon at you, which we need to just clear out here. So what is a feeder fund? A feeder fund is an investment which is denominated in rands. And what happens is that money you invest in rands, you get a rand account, but once you've invested the money, the product provider actually takes the money and sends it overseas and then buys global investments on your behalf. When you decide to sell that investment one day, the product provider will then sell those investments, return the money to you in rands. So the idea there is that you would get the benefit of the rand weakening against the global markets if that's what happens. So, if the rand goes from, let's say, 16 Rand 50 to the dollar and it goes to 30 Rand to the dollar over time, that you would get the benefit of the rand weakening, and then you would get the benefit of whatever the global markets are doing in dollar terms as well. So if the US stock market is your market of choice and it goes up from $1,000 to $5,000 in value, then you would get that benefit as well. So I like feeder funds because they're actually set up very easily for us to do monthly debit orders and not to worry too much about the rand, dollar, and global markets and all that stuff. And if that's what you're going to do, I think investing consistently on a monthly basis over a number of years makes a lot of sense. My trigger for sending money overseas, how do you decide when to convert that feeder fund into a global lump sum that you actually send out? My view is anywhere kind of between 500,000 Rand to just below $1 million Rand is kind of the number that you're looking for. Because to convert that, those rands into dollars is then going to get you kind of a good price in terms of the forex rates. When the banks charge you to convert your rands to dollars, they're always going to charge you money to do it. And the more money you've got, hopefully, the lower the fees are as a percentage. It also means that when you then send the money overseas, if you're going to buy shares or exchange traded funds, those transaction costs as a percentage will be lower when you do larger amounts. And that also makes sense. So I think it's about trying to be cost effective on the way that you send the money out. If you're sitting on lump sums in South Africa, let's just say that you get, some big lump sum and it's worth, close to R1 million or a lot more than that, then I think it makes sense to send the money offshore directly, because to me, around R1 million mark is probably a good level to start getting, lowish costs on global investments. And I think, just be careful there around currency when you send the money out. I think, you need to review targets for yourself once a year, but for now, if you're doing it, for the next, let's say, year or so, when the rand is at about 15 Rand 50 to the dollar, I think that's a good level to convert rands into dollars. So in other words, if it was, 15.30 or, 15 Rand or something, or better than 15.50 to the dollar, then it's a good time to send rands out. If it's sitting at 16 Rand 50 or 18 Rand or something like that, then don't send the money out as a lump sum. Just wait. If you're looking at pounds, the level for me is about 20 Rand 50 to the pound. So if it's below 20 Rand 50 to the pound, I would like to send the money out. If it's above that, if it's sitting at 21 Rand or 23 Rand to the pound, then I would wait again. And then lastly, the euro. And my level for the euro is about 17 Rand to the euro. it's important to know that that will change. I don't have that as a fixed rule for the rest of my life. It's something that I would look at. On average, I look at it once a year and kind of review. I certainly don't review that target every month because the rand is hugely volatile. So I think give yourself an annual goal for when you would send money out at a targeted exchange rate, and then wait until you've got enough money to do it. Otherwise, nothing wrong with feeder funds. Just make sure they're very well diversified, low cost feeder funds. Good luck with your investment strategy.
Hello. Okay, so I have a question about safely getting money overseas if you are intending on moving overseas at some stage, not just yet. I have every intention of using my British passport and moving over to somewhere in Europe at some stage, but it won't be within the next 5 years or so. But I would like to move my money over in the meantime, or some of it anyway, because I'm concerned that the longer it stays here, the more the rand depreciates and the less my money will be worth when I do eventually go over. So I would love some advice on low risk ways of getting my money overseas and keeping it safely over there until I am ready to go and join it.
The question of how we deal with moving money overseas is one that a lot of us in South Africa are facing. We want to either move our money to kind of diversify our risks away from South Africa, or take advantage of investments overseas, that we can't get here, or as in your case, where you might want to actually live in another country permanently or for a long period of time. And so I think the two routes that you've got that are fairly straightforward and fairly easy and let's say safe from the point of view of not being exposed to crooks or corruption or those kinds of things, or scams is really the word I'm looking for, would be either to open a overseas unit trust, and I'll talk through that now, or to open up an offshore account at a global stockbroker, and then buy shares or unit trusts or exchange traded funds that way. So let's just talk through the unit trust option first. There are lots of unit trusts that are offered around the world, but also by South African companies around the world that are denominated in dollars, pounds, or euros. And so, for example, you could buy a unit trust from a South African, a company that was started in South Africa, but now operates a unit trust in Ireland, for example. And you can say, okay, I'm going to go and buy a unit trust from that company. I will be able to, use my R1 million allowance, which is what you're allowed to do without going through a whole tax clearance process. You can send money through your bank, for example, and actually open an account with an overseas unit trust company that you're familiar with, and then send the money to them and have it invested in the currency of your choice, and it'll primarily be dollars, pounds, or euros, and then you buy a fund to kind of build up your overseas money when you're when you've got money to send overseas, and secondly, when you need to access it, if you're living in Europe, being able to access money from a unit trust in that's sitting in Ireland actually isn't that difficult for you. What you would need to simply do is open a bank account in the country that you're living in, and then send an updated kind of FICA to the unit trust company to say, hey, my bank account's changed, here's my new details, here's my passport or whatever to prove my ID. They'll change your bank account, and then you can start to move money into your account when you need it. And I think for a lot of people, that would be an ideal way to go. And if you look at the unit trust companies in South Africa that you're familiar with, that then using one of their funds that's most suitable for you might be the best route you follow. Alternate to that, there are thousands and thousands of unit trusts offered by many different fund managers around the world. I think the one thing about a unit trust is that at least if you invest in the unit trust, it might go up or down dependent on what stock markets are doing, but it's very unlikely that you would lose money because it was a scam or some kind of a dodgy thing. Especially unit trusts that are run in South Africa are extremely well regulated. Unit trusts that are in Ireland, and you can tell that because at the end of their name they've got an acronym that says UCITS. UCITS. UCITS, and that means that it's a regulated unit trust in a very well-regulated jurisdiction like Ireland, which is one of the big homes for global unit trusts around the world. The other place would be Luxembourg, and then I guess the US. If you were looking at the US, they've got lots of unit trusts as well. But to buy a UCITS fund would be a good way to go. A lot of other people are much more interested in buying exchange-traded funds or buying individual shares. And if that's a route you want to follow, then that means you need to open up a stockbroking account, with a global manager. And certainly, there are lots of them around the world, and look at a big, well-respected one. I hate to give kind of free advertising to these guys because they need to kind of stand on their own, but there are lots of these big global brokers. And there, what you want to do is make sure it's in a place also like Switzerland, Ireland, Luxembourg, or the Channel Islands, which are Jersey, Guernsey, Isle of Man, because those are well-regulated jurisdictions, and they don't charge tax on non-residents, and that's important because you don't want to be paying taxes twice when you have your money invested overseas. So you could do that, and then you could buy yourself exchange-traded funds, ETFs, if that's what you prefer, or individual shares. So I think if kind of reading between the lines in terms of your question, if you're looking for something that's reasonably low risk in terms of scam risk, then a unit trust is a good idea, especially if you're not going to put in a lot of homework into choosing individual shares or ETFs. Then maybe just buy a unit trust. They call them mutual funds overseas. If you're planning to spend the time in Europe itself, so and you want to live in Europe one day, that means you're going to spend euros. Then it's probably worth buying a euro-denominated fund. If it looks like you're going to use your British passport to actually be in the UK itself, then you should maybe buy pound denominated funds, and then you've taken currency risk out. My last comment is don't be too panicked about the rand and the depreciation or appreciation. The rand moves in very big cycles, and it's come out of a very long cycle of depreciating. I suspect in the next while that the rand won't depreciate as fast, and if anything, if the commodity cycle around the world carries on, the rand might actually appreciate for a time. But those are the best ideas I've got for you.
Prescient Investment Management. Informed by science, guided by insight. Prescient Investment Management is a registered financial service provider.